Today, what I want to do is a case study video talking about a recent transaction I did where I was the mortgage loan officer as well as the real estate broker. This was a kind of up and down deal. We had a few hiccups along the way, but I felt like there were some teachable moments that I wanted to share with you as homeowners as well as realtors because it involved a condo. So here in South Florida, a lot of our inventory is condos. So it only makes sense that we explore options that can help buyers purchase condos with home prices being what they are and the mortgage interest rates ticking up the way they are. So I'm going to start by giving you a quick market update. Interest rates are hovering around 8% right now for a 30-year fixed with good credit. And one of the most frequently asked questions I get is, why is it that housing prices are going up if interest rates are so high? Isn't it supposed to be the other way around? And normally that would be true. But the other factor that's affecting home prices is we're low on inventory. In 2020, we had around 129,000 homes listed for sale. And as of right now, we're still hovering around roughly half of that. I want to start by dispelling a few myths when it comes to obtaining a mortgage to purchase your home. One of the things people believe is that if I don't have a 700 credit score, I can't purchase a home. That is not the case. Obviously, the higher your credit score, the better. However, in some cases, you could have a sub 600 score and qualify for a loan. There are myriad other factors that go into determining whether or not you will qualify for a mortgage, one of them being your income as well as how much money down you have. There are a few other things that the banks are going to look at, for example, your DTI, your debt to income ratio, as well as how long you've been on your job, which brings me into the other myth. You don't have to be on your job for 20 years to successfully apply for a mortgage. If you've been in the same industry for the past 2 to 3 years, typically that's the time frame that the bank uses to establish stability. So let's use a nurse, for example. Let's say you've been a nurse for 3 years and your first job, you were with them for maybe a year, and then you switch jobs and now you've been with your latest job for a little over a year. That's 2 years worth of job history in the same industry. So switching jobs should not discourage you from applying for a mortgage. As long as there's not a huge gap between you moving from one job to the next and you can explain what happened, you should be okay being in that industry and applying for a mortgage. I hope you're enjoying this video, folks. If you're finding value in it, don't forget to like, share, and subscribe. The other myth I want to dispel is the down payment requirement. You do not need 20% down to purchase a home. The programs that are available now are excellent for first-time home buyers. So, for example, an FHA loan only requires 3.5% down. There are conventional loans that also only require maybe 3 to 5% down. So yes, you can get into a home with less than 20% down, a lot less than 20% down. Now, if you'd like to put more money down when you're purchasing a home, you can put 20% down and avoid what's called PMI, which is private mortgage insurance. Once you go beyond that threshold, you are not required to carry private mortgage insurance, which is coverage that really protects the bank in case you default on the loan. The other thing I want to touch on are some of the grant programs that are available. A very good one is the Hometown Heroes program. I'm going to put a link to a video I did a while back. It's a short video talking about this program. It's an excellent program, and I actually closed a deal, not this last one, but the one before was purchased using funds from the Hometown Heroes program, and it went relatively smoothly. They do still have funds available if you qualify for this, if you are a first responder, if you are a police officer, a nurse, a teacher, a firefighter, etc. Get in touch with me and I'll go over the details with you. So one of the reasons I wanted to talk about this transaction in particular is because, as I mentioned earlier, it was a condominium. And let me just go over really quickly for those who don't know the difference between a condominium association and a homeowners association, or an HOA. So the primary difference is, there are a few differences, but the primary difference is that a condo association all the owners of that condo are part owners of that entire community, not just their unit, but also the common areas of that community. So if you are in a condominium association, you own your unit, you own a park that may be in that community, you own the pool, you're a part owner of the entire community, including the common areas, the gym, the pool, the park area. If it has a lake, you are part owner of that. Whereas with a homeowners association, you own only your specific unit. You own your house and the lot that it may be on. As a result of this, the guidelines are more stringent for FHA borrowers when it comes to purchasing a condo. Number one, the condominium association has to be approved by FHA to be able to purchase in a condominium community. Now, if you're a realtor and you're watching this, you're familiar with what I'm saying to you because there are only a handful. As many condominium associations as we have here in South Florida, there are only a handful that are pre-approved for FHA. Now, that should not stop you from seeing whether or not a condominium community that your buyer or your client may be interested in may qualify for purchase with an FHA loan. And this transaction that I'm telling you that I just completed is Exhibit A of that. Some of the criteria that the banks are more stringent on that I was referring to earlier are: one, the ratios of owners, actual people who own the condos and live in them versus investors, need to be low. Typically, banks don't like to see a higher percentage of owners being investors or corporations. They also want to see a healthy budget, healthy reserves, right, in case repairs are needed, etc. They also will check how many of your owners are delinquent on their condo association payment, their monthly payments. Also, the condo can't be involved in any kind of lawsuit or litigation currently, and they need to have the proper insurance coverages. Once the condo meets these guidelines, they can apply for, or someone like myself can apply for, what's called a spot approval or a single unit approval. Single family homes now, even here in West Palm Beach, are hovering around $450,000, $500,000, and you may have a client that can get approved at a lower price point and become a homeowner and purchase a condo. Now, the problem is that there's this stigma attached to condos, and this is precisely what happened with the condo that I got my buyer approved on. Because there hadn't been an FHA loan financed in that community for the past 4 or 5 years, everyone just assumed that the community was not approved for FHA loans. I spoke to several agents who had buyers. Even some of the listing agents in this community did not realize that the community was eligible and is eligible. Thank you for watching, folks. Don't hesitate to reach out if you have a question. Talk to you soon.